What's going on, hustlers? Welcome back to the Stock Hustler Network, and you are tuning in to the Hustle House right now with Sir Willoughby, and we got a loaded week to break down. We got cooler and warm. It's kind of warm inflation, you ask me. It wasn't cooler. PCE data came out. PCE data came out. It was, as expected, but for me, it was warm. That's how I kind of took it. The market kind of took it the same way earlier this week. We got the peace deal with Iran. We're knocking on doors to not being the peace deal. We got the Iran shot missiles at something. It was a drone attack. There was a cargo ship in the Strait of Hormuz trying to pass through. Iran struck it, and you got Trump replying to that in a tweet. We also got oil down. Oil did not react to the news. I guess it kind of, tired of the whipsawing back and forth. The oil did not react to the news, but the market kind of did today. And we got a sell-off, because a lot of different things was going on. There's a whole lot of in between, up and down, and oil did not react. Stayed below $75, kind of below 73. I think it kind of closed around the $60 range. You got a chip giant that blew earnings clean out of waters. Came through with earnings on Wednesday. It was great. That drove the market to kind of recover, rebound from Monday's sell-off. So, but the market gave those gains back today. We had two tech sell-off weeks in a row. NASDAQ and the S&P 500 both been down the last 2 weeks, and we would like to discuss that and see what's going on. We're gonna get a deep dive inside of that. So before you panic, you know what I'm saying? Before you chase FOMO or just do anything, let's read the red tape together. Smash the like, drop your tickets in the comment, hit the subscribe button if you ain't. Before we get started, also I'm gonna let you know the program is brought to you by NEXGEN Traders. School community, the link will be in the top description below. Come over to the school, dive in, learn, build your foundation, learn how to trade options, get in with the family, start making money with us as we start getting earnings. As we start, learning to earn, to get more and more deeper in the market. If you're a beginner, definitely beginner friendly. If you already kind of diverse in the market, come on over, join, give us your insight, and let us get some money. It's got a small community. We're slowly building up. We're actually running a 7-day free trial also, so come over there and enjoy that 7-day free trial before it's over. When you get in the community, go on, hop in there. If you already know what you're doing, man, please feel free to give us your advice. If you don't, join the Option Made Simple course. If you get inside that Option Trader Made Simple course, you will definitely know how to trade options by the time you're done with that course. We got quizzes in there so you can test your knowledge. You ain't just watching videos, taking notes. And this program also is brought to you and sponsored by Moomoo. You get 8.1% on your APY on your money when you use the link below. Get some NVDA shares when you sign up and deposit $100. Moomoo is a great platform. We use the level 2, level 3 data that it has, and that's how we kind of get some of the great tools that they have to offer, and we get 8.1% on our money while we do that. All right, so let's move it on, man. We got the segment, man. We got the Fed. I ain't really got no slides right now. We're just gonna talk it too because I really want to show you guys the charts so we can know what's going on. We got the segment. We got the Fed favorite number cooled off. You get what I'm saying? So the first up, we got the PCE. This is the Fed's preferred inflation data. It dropped Thursday. Headline PCE came in at 0.4% month over month, holding steady, and with an annual rate running about 4.1%. Still the hottest reading since 2023. So it's still kind of hot. That's why I call it warm inflationary territory, because they're trying to say that it's cooling off. I say it's warm. 2003, if you was in the market, you know what happened. But we did bounce back on that at the end of Q4. In Q3, going into Q4 is 2023. So that is a crucial year. On paper, that looks scary. You get what I'm saying? So, but here's the angle in the headlines. So let's before you miss it. Came in better than feared. The street braced worse, and we didn't get worse. You get what I'm saying? So we already knew that we was expecting 4.1%. It did 4.1%. So kind of warmed off on their favorite gouge, but the Fed is still kind of hawkish. You know what I'm saying? So we had a Fed Fed come out and say that everybody's talking about hints and pencils in rate hikes. So now that's the twist. The Fed last week cracked the door open to rate hikes in 2026 this year. So that could be a basis point, 50 basis point, who knows. Read that back. We went from when they did want to cut to now they do want to hike. That was at January when they announced June and they're talking about cutting. That's a whole new game for the market. And that's exactly why the high flyers are getting in. That's what I mean, getting hit. That's why the hike risk is now on the table and the price set grows, names bleed fast. So they beat like the big names, your Apples are already crushing now. You got Apple below $300, below 298. You got Nvidia below $200. So you got the big names cooling off. You know what I'm saying? So you got a S&P down below 735. That's a crucial number that it dropped below. So you got that inflationary. Now we got real data. The market priced in the war, priced in the oil. All that's kind of priced in, not really reacting to what Trump kind of saying about the tariffs. It's really zoning in on the data right now. You get what I'm saying? So that's what I kind of feel like how the market reacting and what it's taking in. And before we move on, none of this information for you to buy, hold, or sell any stock asset that we may talk about. Any financial decision that you make, you should make on your own. You should not make the educated decision. You should do your own research to find a financial advisor in your area to help you make that decision. So let's dive into Iran deal, man. This crushing war. You got geopoliticals moving the tape this week too. You got the U.S. and Iran signed the memorandum back on June 17th for the 60-day extension of the ceasefire, but Iran commits to no nukes. They not commit to no nukes, and the Strait of Hormuz still remain open. Here's what this means for our charts. Oil is a free fall right now. Brent dropped under $74, like I just said, lowest since before the February strikes. WTI down near $70. And Friday, we got the crude hit another 3.5% as the tankers kept flowing through the Strait of Hormuz with no problems. But we ain't gonna point the count. We ain't gonna just do this right now. You get what I'm saying? We ain't just gonna jump to conclusions, because why do we care about this? Falling oil is a disinflation tailwind, and it's quite bullish on the offset to the hawkish Fed right now. But we're going to write this down now. It's fragile. Lebanon flares up, nuclear inspections breakdown. That risk premium snaps right back into the crude. Don't marry the oil down trade. Don't just, it could be a rug pull if you going short on oil right now. So, we're going to watch the lower third of the oil bouncing around the $70 and the $75 range. We also got Micron came in. That's the big chip stop I want to talk about. We got Micron came in, beat earnings. You know what I'm saying? They blew it out of the waters. It was crushing. This story this week was its masterclass of its own. Micron reported Wednesday after the close and absolutely crushed it. Their revenue came in at $41.46 billion versus the $35.8 billion that was expected. Earnings per share came in at $25.11 versus the $20.70 that they expected. Q4 guidance was $50 billion heading into the next quarter. Headed to the Q4 quarter. So that's a good midpoint, $6 billion over what the street expected. So Micron continues to expect to grow going on into December. And in January, also we got $22 billion that they locked in consumer commitments with the HBMI that they sold out. Stock popped nearly 12% after hours. It was a monster print. I didn't specifically play the position. I buy my Micron. I hold on to it. But I'm looking. I took a little profits, but I'm looking for it to fall back down a little bit below the $1,000 level, so we can kind of rinse and repeat. But I like Micron. Here's the lesson that we need. Most retail traders definitely need to know, and not miss it. Good news for Micron is not good news for the rest of the tech sector. Why? Because everybody who buys memory just got way more expensive. Look at Thursday, Apple down 6%. You got Microsoft just hit a 2023 low, and that's at down 3%. You got both announced price hikes on the iPhone and Xbox Pro because memory prices are climbing. So Apple stock fell on the news that they was gonna, raise the prices of their devices, the MacBook and iPhone, because the price to get these high price, advanced chips, or is are starting to spike up. So they have to supplement that margin. That's the way it's. Micron wins, but the device makers on the back end eat the margin. That's why one company crushing earnings couldn't lift the whole tape, but it kind of held the market for a little bit until that PCE data came in and talks of, you know, Iran striking drone strikes on a tanker ship. So why are chips and AI selling off? We really want to dive into that. Everybody want to know that. All right, let me be crystal clear here, hustlers. This is sell off. It's not broken fundamentals. The companies are doing good. They just need money to continue building out the infrastructure. So yeah, they liquidate. Got a lot of insider selling too. So nobody missed earnings. That's good. This is expected. A reset after monster runs. These are three drivers. One, the run was insane. The Nasdaq went up 26% off March bottoms. The semiconductor index ran over 100% in the same stretch. This is within 3 months we talking about. A cool down after that is normal and very healthy. But two, you got the hawkish Fed at high risk right now. Pushes the hike rate to multiple names, most of the hardest things to do right now. You got number three, the AI spending question. The street is finally scrutinizing all the debt funded AI build out. And Friday it got worse. That's what caused the sell off today. People looking at the numbers. They're trying to understand. Hey, if you bringing in revenue, but you not got enough money to build out the infrastructure to continue going, what you got going on for real on the back end? Are we buying into future earnings? Are we buying into future, revenue? Are what are we really buying into when we think about the AI infrastructure right now for it to be so heavily priced? And that kind of got worse today. A part of the report was too that OpenAI said they're gonna delay their IPO until next year, on the back of SpaceX flopping after this debut, falling down to 150, 153, briefly falling below 150 for a second. I think it ended up closing at 153. That's got the people asking if the AI infrastructure spending isn't even sustainable at this time. And you already know Tuesday was the gut puncher. The semiconductor index dumped almost 8% in the day. NVDA fell off 4%. Micron was down 11 at the open. You got S&K in Korea with the index was down over 12%. My line for this whole moment is investors are demanding proof instead of promises right now. And that put on the board for everybody to pay attention to. The free money for a good story is over right now. You got to deliver. That's what the market is telling the company. So we need to be in tune with how the big money reacts. Index is cool off for the week's run. Here's where we closed at this week. We had the S&P close at 73.54, basically flat on Friday, but down 2% on the whole week. You had Nasdaq closing at the 29.70. That's 5 straight red days in a row for the Nasdaq, falling down 4.60% on the week. And you got the Dow 5.1876%. And check this, the Dow actually rose 0.6% on the week. The S&P down about 3% for all of June. The semiconductor index is flirting with the correction, down almost 10%. You had the VIX flirting with the $20 level today. It briefly went over 255, hit 256 high. It kind of cooled back down. So here's the real matter right now. This is rotation. It's not a collapse. You got advancing stocks are still outnumbering the decliners. You got money isn't leaving the market. It's just rotating into different sectors. It's moving out of the crowd of tech into industrials, healthcare, energy, financials, and materials like defense. Gold caught a bid near 40,000, and it kind of cool on the cooler PCE. We want to see gold kind of hold up that 4,000 level, but when the stock market go good, gold tends to kind of fall off. But when stock market going bad and things finna get a little ugly, gold tends to go up. The Dow holding green while the Nasdaq bleed. That tells you exactly where the money is going. That's not a crash. That's a market changing of leadership. I'm reading the charts right now, and I'm gonna let you get my framework for a minute. We pull up the charts, and we're gonna see what we're looking at. Let me pull up the charts for you. Just want to check out the SPY. Alright. So we looking at the SPY right now, man. So the SPY definitely today, if you looking at thing on the 4 hour, man, she kind of I'll pull it down to the 1 hour. She really kind of chopped up, man. You see, got lower lows coming in all these last few days. Lower lows, lower highs, lower lows, lower highs. Got a gap down, lower lows, lower highs, all the way up into the day. So the market has been briefly selling off. And we hit this point back in March when I said we was gonna get that cool down on the daily. We got to break below 50 EMA. It was right here. We didn't even break it though. We ain't fully break it. It's April. Nah, it was March. Here you go. My bad, that's ugly shit. Right here back in March, I said if we get the 50, if we get the counter close below the 50 EMA, the market's gonna sell off. And as you see, we got a counter close right here in January on the below the 50. The market kind of cooled off, but reacted back. And then coming up in February, we got the same thing, cooled off, bounced, reacted back. That's the market testing the 52 times. So the next time we got the market counter close below the 50 EMA was right here in March. And that's when we got the big sell-off. So we see that when we get a good counter close below the 50 EMA on the daily SPY, it tends to sell off. So now we back around that territory flirting with the 50 EMA again. I can move my pre-market levels from my day trades today. And let me reset the chart for us so we know what we're doing on Sunday. We got the previous day low right here. This would be Friday's low. And this will be Friday's high. So we know what we're looking at on the day chart. But now we broke below the previous week's low, and that was at that 739, 738. But the 736 and 735 was the crucial level of support. If you look to the left right here, you can see the buyer stepped in, pushed it back up, and kind of held it up. But we didn't get that. We got to break down. So what they then gave us was this doji counter that we got today. And on the doji counter, we got the break below the previous day low, and we got the break below the 2-week previous low. So giving us the indication that the market wants to push the SPY down to the 715. That would be the previous month's low back in May. And that will be our next line of support. If we can't hold the 722, if we can't hold the 722 and the 736 range with consolidation or a bounce up or bounce down, we would then go down to this previous month low. And its support line is kind of weak. The 2-month support line is way more better, but I don't think we'll probably see that. That's a big drawdown. Possibly could happen, possibly could not. But this is what I see with the SPY. I can see us bouncing off of the 715 level. If it breaks below the previous week low, I can see it significantly bouncing back. But if not, and the market's kind of just cooling and correcting, and everybody's just moving positions, I can see the market consolidating and bouncing and whips on in the 222, 236 range, kind of like it did in this range. So that's what I'm saying on the SPY. That's what I'm saying on the SPY. It had a 2% dip. I ain't worried yet though. It's holding. It's holding. So let's look at the QQQ. Pull the trap up for y'all, man. That's what I call this watch list. This is the trap. This is the hustle house. Man, hit the like button if you ain't hit the like button. Tap in. Let me know. Tap in the comments if you like some of this good information. I'm gonna try to bring you guys more of the charts so you can know what I'm looking at and how I'm actually analyzing the market. I definitely want to see what the pre-market doing on Sunday, man. The 24-hour market. So we're gonna try with the QQQ real quick. And you got the 50 MA moving in fast. You get what I'm saying? You got that 50 MA moving in fast. So the QQQ held up the previous day low, kind of starting to, we got some good buyers on NASDAQ in this area. Delete that alert. Let's move this down. Close that got a 703 low. It fell tremendously though from the previous day's high. So this is definitely giving us bearish on the NASDAQ for sure. Yeah, we got the counter close, but see the QQQ did the same thing around the same time when it start playing around the 50 and it breaks below the 50 MA. It tends, if it don't recover, it would tend to trade below that, and we can know we start pushing ourselves a little bit lower below that 50 MA line. That's a key signal. If the market going into a correction, the next key signal would be the breakdown of the 200 MA, and that's bearish. This is bearish news, but we could see a big bounce from these levels because these are good levels. These are good price points, good price action. There's a lot of buyers kind of picking it up and protecting in this range. So we'll see. We'll see. But this is what I like on the QQQ, man. I see the 50 coming in fast. It can't hold this. So the 50 can't sit in between the 20 MA, this white line, or the 9 MA, this green line, and the 50. They can't sit in that scrunch like that. So when they get the narrowing in real tight like that, they gotta bounce out, either break out up above or break out below. So that's a critical zone. So we want to see right here on QQQ where we get a candle, close right here. You get what I'm saying? We get a counter close right here. I need a red counter. Let me say that simply. We get a counter close right here. Break below the 50, and we start really getting a real pushback down because we break this previous week low. What's the monthly low? The previous month low. This is the previous month's low on the QQQ. And you want to make sure you know these levels, because this is where you know you need to get in or you need to get out at. So we got the previous month low right here. We're going to set our alert for that because we need to know if it ever come back down to that territory. We buying heavy and we playing puts at the same time. You know what I'm saying? So let's go back to the daily. All right, so boom. We know if we break the previous week low, At 703, 700 range on the QQQ. We coming back down to this 687, 685 range, 690 range. We're gonna be bouncing right in between here. But this is a level, next level of support. So we would love to see the bounce and the buyers pick this thing up like they kind of been doing. They kind of been holding it up, even though that they've been closing green. Even though they've been closing green. I mean red. My bad, guys. We know we got our institutional buyers right here. So we know we got our institutional buyers right here. They've been holding it up. But the sellers are pushing it down tremendously. The sellers are pushing it down tremendously. The sellers pushing it down tremendously. So long as the sellers pushing it down, it's gonna always be, kind of bad in that area, in that zone. So hey, we're just gonna see. We're gonna see how we play it. But that's what I like on the QQQ. We got the buyers stepping in. Eventually, we hope that they step in on Monday. If not, we definitely gonna break down below that. I'm gonna give you one more in the trap, man. I like the IWM. I trap IWM all the time, man. I like the volatility and I like the cheap contracts. And another thing about the QQQ, man, the weekend is that it's a 5-day red too. The momentum broke on the daily. We just seen that. And that, man, I'm telling you, that 50 MA is crucial. It's moving in. So despite the SPY and the NASDAQ, small caps been moving. Small caps been moving. We had IWM briefly touch over $300, man. Actually hit 299, touched over $300 briefly yesterday. And today kind of cooled off from that. So let's refix our levels. I gotta leave that alert right there. So let's fix our levels. So boom. Then too much break, too much lower than the previous. But so what's so beautiful about this IWM chart is the 9 EMA is touching this bottom. It bounced off this 9 EMA. Oh yeah, we made some money on this thing too. Let me delete that. Man, we're gonna delete that. Made some money on this thing both ways, man. So I'm going right. So we got IWM. My tail is the rotation is real. Small caps is starting to win right now. Got the Russell leading, and I'm watching for the 2050 reclaim. So we got IWM breaking over 300. Boom. Pulling down, but still showing us very, very much bullish by holding the support on the 9. So it bounced off this 9 and closing and opening hopefully on Monday and Sunday night. We see in the 24-hour market, pre-market. Hope that holds up and we get the close, the open at least in the 298. If we can get the open on the IWM in the 298, no less than 298. We needed to open in this range for it to continue to remain bullish. We want to stay over that previous week's high, which would now be this $300 range going into next week. We gotta keep it. We gotta keep it real, man. IWM is kind of maxing out, and if the overall market is pulling back, we could see this thing go back up even more. Because a lot of people like to take big money out of big money and move it into small caps for a little bit more small and safer moves. So that's what I see with the charts. We got a shift in the market. We got a big shift going on. I ain't gonna keep you guys on here alone. If you really want to learn, you really want to tap in with me to get deeper and deeper and deeper inside of the charts, man, I highly suggest you to come over into the Next Gen School community. Click the link in the description. It's 7 day free trial. After 7 days, it's only $10 a month. I mean, you can literally make one trade and pay for the whole year. $120. You can pay for the whole year off of one trade. Get over there and learn. Got courses, quizzes, and we dropping plays, alerts, wins. We let you know how we breaking down the market. We get market news updates all the time. So we very in tune in the community. I got other experts in the community helping me out with their advice, helping the community out, everybody working together so we can get to the main goal, and that's to make money and to achieve financial freedom by using the market as a tool to actually make passive and active income to help us out in our daily lives. So tap in with the Next Gen Trader School community if you're ready to go ahead and learn more. You get what I'm saying? So I appreciate you guys for tapping in. So that's your week. The hustlers, inflation cool, warm down. You got the Feds hawkish. You got the oil deal. Kind of got oil going down off the Iran deal below $75. You got Micron crush the earnings. AI trade is getting reset expectations. Proof over promises is coming in. Heads up for next week though. You got markets are closed next Friday for July 4th or July 3rd for the holiday. So we get the jobs report next week too. So that's your next big catalyst coming up. We'll break that down here on Sunday. If this helps you, man, hit the like, hit the subscribe button. Please, please, please don't feel scared to share this to a friend, family member who you want to get in the market and tap in and start learning. I see you on the next one. Like we always say, peace, love, motivation, plus dedication equals progression. Let's go. I believe in you. Peace and love.